Three, two.
What up, fam? This is Min with What's a Mortgage. Tonight is a very special night. Tonight, I'm going to open up and share something really personal in my life on how I became a loan officer, why I became a loan officer. People think sometimes when you get into a career, it's because of the money. But some people get into a career because something happened in their life that changed their life forever, and that's why they entered a career. What's going on, guys? My name is Min with What's a Mortgage. Welcome to our channel. The goal of our channel is to simplify home ownership. If it's your first time tuning in, do me a huge favor. Hit that subscribe or notification button so you're notified every time we go live or post new content. We go live every Monday night on Facebook and YouTube at 9 o'clock, Tuesday night at 9 p.m. on Instagram, and Wednesday night on TikTok at 9 p.m. Also, this is an interactive channel, so ask a lot of questions, okay? But tonight is a special night. Before you ask your questions, I'm gonna tell you the story on why I became a loan officer. I want to say first, coming here from Vietnam was really hard for my family, and of course, as every foreigner and every immigrant, our goal is to own a house. And tonight, I'm going to talk about how buying a home saved my family. Guys, when I talk to you guys about buying a home, I don't need to sell you guys a home because I know how home ownership affected my family, how it saved my family, and how home ownership can save your life as well. I know if you don't qualify, you got to make some arrangements to one day buy in the future, and I'll go over that as well. But if you qualify to buy, I would not wait because the sooner you buy a home, the safer it is for you and your family. Of course, if you're single or if you are making a lot of money investing it somewhere else, do not buy a home. But like my parents, most foreigners, all we know is to put our heads down, work hard, buy a home, and let the home do the rest. Okay, let's get into it. So, this is my family. There's my dad, Tuan Nguyen, and there's my mom, Diana Nguyen. Her Vietnamese name is Lon, but of course, a lot of foreigners, when they come to the United States, they try to add an American name. Of course, my mom tried to add an American name. She got Diana, from, of course, from Princess Diane, Diana, right? And then, of course, my brother, Paul Nguyen. Paul, if you're watching this, I love you, brother. And this is my family. This is our circle of trust right here. Okay, so our family, my dad and my parents were immigrants from Vietnam that came over here. This dad is actually my stepdad. My father passed away when I was really young. I never really talk about it, but this is my stepdad. I love this man so much. He made so many sacrifices to create opportunity for me. Of course, growing up, I thought, you know what? I wish they would have done more. They would have done this. They would have done that. I didn't understand the sacrifices my parents made until I got older. So whatever sacrifices you make, your kids will not understand until they get older. And if you are the kid and you got older, you need to understand the sacrifices your parents made to put you in the position you are today. Okay? So the sacrifices my dad made is in 1990 when he bought our house. We bought our home in 1990 in Fullerton. He bought it for $160,000. He put 10% down. His interest rate, I think, was 10% from 10 and a quarter. He was telling me the story. Back then, rent was $500 a month. And this man is crazy. My mom thought he was crazy. Our mortgage payment was $1,500. Being immigrants, working. My dad barely spoke English. My mom barely spoke English. And we took a risk, or he took a risk, and he bought a home. And I used to get so mad at my dad. Like, Dad, why aren't you adventurous? Why don't you take risks? The market is booming. Why don't you buy and flip homes? This is the risk he took. And this was the only risk he took. And this risk changed my family. So we paid $500 a month of rent. He was cozy. We were barely scraping by. And our family was able to muster up $1,500 a month. Right? That's 3 times that amount to own this house. This is the actual house. Okay. Guys, don't be zooming in looking at the license plate either or the address, all right? Fooey on you. But we had this house, and this house really changed and saved our lives. We bought it in 1990, and boom, 1995 and 1997, the hardest years of my dad's life. Every time my dad tells this story, he cries. My mom talks about it. Even I'm like getting teary-eyed, okay? In 95, my dad got laid off. In 1995, my dad got laid off, okay? And it was so hard for him to find a job. If it wasn't for the equity line of credit in this house, we would not have made it. In 1995, and then he got a job again. And then 96, he just got a job a couple months later. He got laid off again. Things just got slow. So we used our equity line of credit. If we didn't have our equity line of credit, we couldn't make our mortgage payment. We couldn't pay our bills. My dad had maxed out his credit cards, but he used this line of credit to pay his debt. And then, of course, in 97, my mom got laid off. My mom got laid off. She was trying to get a job. She was getting unemployment, but she was trying not get a job. Sorry, take that back. She was trying to get her her license to do hair, and unemployment found off. They fined her a bunch of money, and after that, she couldn't even get unemployment anymore either. So this house literally saved us from being homeless, helped us pay our bills, helped us have a roof over my head. And in the 90s, I was a brat. I was like, why can't I have this? Why can't I have that? In the 90s, dude, your boy here, I was awesome at school, right? I graduated high school, I think, with a 3.8. I had the 3.85. Okay, my amazing grades. I did AP classes, anything that was honors. I did my best. I didn't finish great, but I did a lot of honored class, right? In case some guys want to look me up. But, you know, this house prevented us from being homeless. I was able to get through life, through school. My parents were able to put a roof over my head because they bought this house, and they were able to leverage the house in tough times. And a lot of people are going to go through that right now, especially right now. Times are getting tough. Right now, you might not see it as a recession kicks in more and more. You're going to see people who have a tons of equity use their equity to cover all their bills to get them by through this recession. I'm telling you guys right now, I'm seeing it right now as we speak. Okay, so up to 97. I finished school in 98. Right, I went to college, Cal State Fullerton. I did not graduate. Times got, I decided I wanted to be an entrepreneur. In 2003. So in 2003, it was summer 2003, my parents were trying to refinance their house. And as they tried to refinance their house, my dad didn't understand the paperwork, right? My mom was going crazy. My mom was thinking my dad was like out there cheating on her. I know, mom, put your dirty laundry out there and you're watching this. Because he kept on refinancing or pulling cash out of his house. But these loan officers were just charging points, eating up the equity. Right, my dad would refinance, and they like when we got the line of credit, when we did the refinance, and that's why I came in like, dude, what's going on here? Why are we being charged so much? We only need X amount of dollars. It's like, whoa, they're just eating up my dad's equity. Okay, so of course that's how I got into the mortgage industry in 2003. When I was reviewing my parents' paperwork, I was like, nah, this ain't going down, and it really inspired me. Like, to how many more people, right, signed their lives away. And that's what happened from 2003 up until 2008. People were just signing their lives away, right? The lender sold them on this low payment, but they didn't understand about these low payments, these negative interest loans, these 2-year fixes, these 3-year fixes, right? Even though people qualified to go full doc, some lenders just went stated to make their lives easy. So in 2003, I joined the mortgage industry, and that's when things started changing for me. Okay, that's when I started doing loans. I started understanding everything. I started as a telemarketer. I remember my boss would throw water bottles at me when I would miss phone calls. It was crazy back in the days because, of course, every time the phone rang, there was money. Okay, now let's go into 2005. Go back to my parents' house. In 2005, my parents opened a hair salon. Like in 97, when my mom got laid off, she finally got her hair certificate, so we opened a hair salon. She pulled out money out of her home. Without this home, we would not be able to try out the American dream. She opened a hair salon in 2005 with our equity line of credit, right? So my dad, that's the one thing he knew how to do was use his equity line of credit. So he did it to start the business. The business wasn't booming. Thank goodness for the line of credit. We were able to get by. But then in 2006, tragedy happened with my family. In 2006, there was a family emergency. My mom had a heart complication and heart surgery, and insurance wouldn't cover the difference. We were brokenhearted. Like, we didn't have the money. The business was up and running. But thank goodness for our equity line of credit. Thank goodness for the equity in our house. If it wasn't for the equity in our house, my mom wouldn't be able to have the surgery and live today. My mom wouldn't be with us today if it wasn't for this house. We would be homeless. My mom would die. We would never try the American dream if it wasn't for this house. This house has saved us so many times. That's why I stand behind homeownership so much. I stand behind the American dream, and the way to do it is through homeownership. And then let's fast forward 2016, right? 2016, I had my business. It was roaring. I left my company. I opened my own mortgage company. The reason why I know so much about mortgages, I had my own company. In 2016, I opened a company called Lincoln Mutual Home Mortgage. We bought a smaller company that had all their licenses. My brother helped me run it. I transferred the business name. He had the awesome credit, right? He had the awesome credit. He was, he came out of the military. He was squeaky clean. Okay. Of course, we had to open warehouse lines. No, that's another story, another day. But because we transferred the home incorrectly to my parents, from my parents to my brother into the corporation, they increased our property tax. That's why I'm telling you guys, in the state of California, be careful transferring title from one person to the next. Be careful doing upgrades on your property. The county looks for any reason to come increase your property taxes. Okay, so when we transferred the home from my parents to my brother, because we were making so much money, we really took our sweet time to try to fight it with the county. And of course, as things got tighter, we got, you know what, let's go fix this county issue because we don't want to pay that much in property taxes. They got denied. You have 2 years to fight it. Okay, so in 2016, we drew I think 200 grand out of my parents' house. After I've been paying it down, when I got in the mortgage industry, I chipped away so much at it, got it down to 100,000. Right, it was at 160. We paid down. They were using the line of credit like crazy. I paid it down. I got it down to 100,000. In 2016, we needed to pull out $200,000 to get me out of all my problems with my mortgage company. Okay. So it literally got us, this house has bailed us out of so many issues. And then 2019 was a couple years after my parents retired. So now we have a balance on the house. My parents, they're retiring, they're old. I'm trying to get my business back up and running again. We did not have a lot. So my parents did a reverse mortgage. In 2019, we did a reverse mortgage. My dad collects $2,400 a month in Social Security, and my mom collects $700 a month. Okay. Right now, I currently pay the property taxes, and we owe $400,000, and the home is worth $720,000. My parents, at their age in their 70s, will never make a mortgage payment again till the day they pass away, because they did a reverse mortgage. I cover the property taxes, and whatever equity is left, if we decide to sell it after they pass, is going to go to my son. The bank doesn't take the house and keep all the equity, by the way. Or we can refinance the home into my name, or, probably my name, and then rent it out and have the tenants pay off the mortgage, and we can still keep the house. The more of the story, this is how homeownership saved my family's lives in different ways. They protected us from being homeless when my dad and my mom lost their job. They kept my mom alive when we needed surgery, provided a place for us to retreat when the market crashed in 2008, created opportunity for my parents, my brother, and I to try to start our own business. Now my parents are retired. They don't have to stress out about a mortgage or property taxes. And they're going to leave money for my son for his future. It's going to be impossible for my son to own a home if it wasn't for my parents selling their house. And that's how home ownership changed my family's lives. I'm sure you can talk to so many other immigrants who came here from their country and how home ownership changed their life. And that's why I stand behind home ownership. I know times get tough, times get challenging, but you need to fight through and believe. Make modification, make change. Well, it's impossible to live here. You might need to move somewhere else. You might have to become uncomfortable. My dad went from paying $500 a month in rent, right, to $1,500 a month. If you don't qualify, you're not planning on buying the house in your area in the next 2 years, you got to move or change. You got to make changes. Look at the changes my dad made that saved our lives. Talk to anyone who's an immigrant who is well off right now. They started with a home. They put their head down. They worked hard. They made modification and changes. The modification and changes are a lot different now than it was back then. Now you might need to move. I know people hate to hear that, but you might need to move so you can start your legacy. You might need to move so you can start building something for your family. Okay? And I'm telling you, this story touches me every day. And every day I fight. I fight for you because my dad fought for me. I know how it is. I would never want you or anyone else to go through what my family went through. And if you do, thank goodness we had a home to bail us out. Think about during pandemic, right? If you did lose your job, you had your home, you had forbearance. You were able to live in your house for 18 months without tripping over a mortgage payment. They roll the difference back to the end of the mortgage. Think about how homeownership has saved so many people. So that's why I'm here to tell you, if you don't qualify, I get it. Make ways to qualify, move somewhere else. If you're making more money doing something else instead of buying a home, then don't buy one. But for most Americans, most immigrants, owning a home will change your life. One last thing I want to put into perspective for you guys. How home ownership changed your lives. I ask people this all the time. Could your parents afford the house that they live in right now with their current financial situation? Can they buy the house that they're living in now, or can they rent? Most likely not, right? But they bought a home, and their home ownership helped them beat inflation. Think about it. If you're paying $2,500 for rent right now, however old you are watching this, right? You pay $2,500 a month for rent. With a 3% increase every year with inflation, in 30 years, you are going to pay $6,000 a month for rent. Can you afford $6,000 a month for rent in the next 30 years when you retire? If you don't buy a house, hopefully you're saving enough to afford the $6,000 a month in rent, right? For those of you who don't buy a house, who max out your 401k, who max out your IRA, right? You're going to have to rip out $72,000 out of your retirement. And of course, if it's pre-tax, you're going to have to get taxed on your money, have enough to cover $72,000 a year just for rent. And I'm telling you guys this right now because I want you guys to look back and go, wow, I listened to Min and my house saved my life. I want you to write that down, put it in your diary. All right, guys. Hopefully this story helps you guys out. Why I became a loan officer, why I'm so passionate about home ownership. It's not about the money. It's about lives. It's about legacy. It's about changing your circumstance. If you are a foreigner, even if you're not a foreigner, you are going to make a difference in not just your life, in your kid's life, in your kid's life, if you do the right thing up front. I look at how expensive it is to live in California. If it's not for my parents' house, my son will struggle to buy a house. Of course, he has me, but what happens if things don't go 100% right for me? At least this house will save my kid and will provide a future for him. All right, guys, hopefully all this information helps you out. If it did, do me a huge favor, leave me some comments here, right? Also, share this video, share the story. If you are on the borderline of buying a house or you know someone who is, share this story with them. These are multiple stories of my personal life that I'm sharing with you so you can understand why I'm so passionate about, why I stand behind it. All right, guys? What's going on, Brian? All right. Hopefully this information helps you guys out.
All right, take it.
Okay, what's going on, guys? What's going on, Chris? How do a reverse mortgage work? Chris Toss. So in a reverse, pretty much after 59 and a half, after your I forget the age. I think 59 and a half. I'm like all crying on the story right now. So you hit a certain age. If you have a balance on your house, you can do something called a reverse mortgage. It's a negative amortization loan. Of course, they want you to make sure you have at least 60% equity. If you have 40% equity, most likely it's going to happen. So you don't even have to pay off your house. You buy a house today, 20 years from now, you have 60% equity. If you're of the right age, you can do a reverse mortgage. Your balance will grow. Make sure you're working with a mortgage broker or a lender that gives you has a low margin that doesn't eat up a lot of your equity. And every month your balance grows, but you don't make a mortgage payment anymore. You could even set up something called a life expectancy set aside where it can cover your property tax insurance. We didn't have to do one because I'm covering my parents' property tax insurance. We just did the regular reverse mortgage. But because of the reverse mortgage, even though our balance grows, me as a child and my brother, we don't have to stress about supporting our parents. And then whatever money we give them, we can give it directly to them because we're not stressing out over paying their bills. Right? My brother's paying all their utilities. I'm, giving my mom money, and they don't have to stress about a mortgage payment. And I cover the property taxes, so they get to keep their money and they get to go on with their lives. And as a child of a parent of an immigrant, you don't have to stress about them. And that's the biggest thing. I had a guy, I'm not friends with him anymore. His mom I should have gotten a reverse mortgage. She didn't. She's working as a nanny right now to make their mortgage payment because when she passes, he doesn't want a balance on the mortgage. That's, I think, is the dirty of the dirty, man. If he can't even give his mom money, she has to work as a nanny, and this guy's pretty well off, so he can get a house without a balance on it. But reverse mortgage is not for everybody. Of course, if you're a baller shot caller, you're older, or you can cover your parents' mortgage, don't do a reverse. But if you can't and you don't want to stress about it, reverse is an amazing product, okay? That's why I moved from LA. Good job. Good decision, Oscar. Proud daughter of immigrants whom own multiple properties. Adri, I'm glad you're on this show today. Your parents did right by you. What up, Larry? Gus, thank you for being vulnerable and sharing your story. Of course, Gus, thank you so much. Thank you, Larry. Inflation will wipe away the debt. U.S. will keep printing. I'm hoping all the debt goes away. We'll see, Marvin. Thank you so much, Brian. You have it right. Thank you. We can pay the second loan with the home equity. So we used our home equity line of credit to pay our mortgage and our other bills. Right? When you get a line of credit from the bank, they're not going to ask you what you're going to use the line of credit on. So when my dad got laid off, we lived on the line of credit on our credit cards. He used credit cards. He used the line of credit to pay until he was able to go back to work, and they would make payments. Like he would make payments. I know he was doing. He wasn't doing everything like we were doing our best. Okay, and that line of credit really bailed us out big time. Are any of these programs for us from Native Americans to help get to buy a new house? Sheila, if you are Native American, I know there are programs out there for you. I don't do them directly, but I know there are. Okay, a lot of credit unions that do work with Native Americans, they have programs designed specifically for you. All right, hopefully that helps you out. What is the home equity rate? So there's two types of line of credit. You can do a line of credit where it's a fixed second, or you can do something called a home equity line of credit where it's like a credit card. Right now, the rates are probably going to be in the 4s, 5s, and 6s, somewhere around there, depending on the credit and depending on how much equity you're going to pull out. Is it a good idea to become a loan officer now or hold off? Refis have died down. I feel like everyone is getting laid off that are loan officers. Moses, right now is probably going to be the hardest time to be a loan officer. But if you become a loan officer right now while everyone's getting out of the business, that's where you'll succeed. So when the market crashed in 07, 08, everyone left. I sat through the market. When I sat through the market, that's where I started building my money because I became well known because so many people left the business. But of course, guess where I lived? I lived at home at my parents' house. I was able to go to my parents' house to be a refuge in their house while the market crashed. And if my parents didn't have a house for me to go home to, where would I go? To their apartment, right? My brother was there. Actually, my brother was in the military at that time. It was crazy. So, like, it was a good thing that my parents had a house. Hopefully that helps you out, Moses. My wife's been on family leave for last year. How long does she have to be back at work before she can apply for a mortgage? If you've been away longer than 6 months, Larry, you got to wait 12 months. Hopefully that helps you out. Beer Durham, hi, man. Can you explain how PMI booster works for 5.01 or 10.1? What's the pros and cons? So the PMI booster, you got to put for the PMI buster, it's 10.01% down. So it's a program out there right now for if you have a 680 to 739 credit score, it's a good program for you. Okay, because there's no adjustment to the interest rate. The rate's not as low as, of course, if you have a 740 credit score, but it's a good deal because it is a true no PMI program. If you have a 680 to 739, it's an amazing program instead of going FHA, but you have to put 10.01% down. You get a regular loan without PMI. Those are the pros. The con, the rate is not as low, but if you have a 680 to 739, if you get a regular conventional or an FHA, the rate would be higher anyways than the PMI busters. So that's the con. It is a higher rate, but the pro is it's not that high rate compared to the situation you're in. Okay, hopefully that helps you out. If you have above a 739, I would look at putting 9% down, using 1% to buy out the PMI, or 5% down and 2% to buy out the PMI. Right now, some people say, like, don't buy out your PMI, you'll gain equity. Right now, as the market kind of slows down, I don't think it's going to crash. I think it's going to slow down. It's still going to grow in paces. It's not going to grow as fast, but I'd rather buy out the PMI and be safe right now. Hopefully that helps you out. What up, Facebook? How work jumbo loans? So jumbo loans typically are going to be 10% down or more, and jumbo loans they want you to have like above a 700 FICO. If you're in 680 to 740, it's not going to be a smoking deal, but 740 and up. 720 and up, smoking deal on jumbo. Debt to income ratios typically 41 to 43%. They want you to have reserves. Jumbo loans are great. If you do qualify, they typically have lower rates than conventional. Also with jumbo loans, there are no PMI. Hopefully that helps you out. Don Wynn, same story. My parents bought in 88, pulled out equity line and built an extra room, moved in with my grandparents. If not grandparents, would have been in a nursery home. Amazing story, Don. I love hearing these stories. But yeah, that is my story in a nutshell. And this is why I stand behind home ownership. It's not because I need to sling a bunch of loans to make ends meet, which it does help. But I tell you this because it changed my life. And if you don't own a home, I'm not shaming anyone for not owning a home, but owning a home will change your life. If you own a home, I promise you, fam, in the long run, it might hurt in the short run. Like my dad went from $500 a month to $1,500. That is not comfortable. That is becoming uncomfortable. But as you guys know, in anything in life, to have success, to have a built future, to build a legacy, you need to get uncomfortable. Doesn't mean you need to live on top ramen. Our society just wants everything to be easy. Everything should be all like there for you. But that's not how life happens. Okay? You got to make sacrifices. Well, it's too expensive here. Oh, I can't live here. Then move somewhere else. It's not going to get cheaper. One last thing. I think everyone has in their mind, oh, mortgage payments should be about $2,000, $2,500. Those days are over. Even if there is some deflation, not saying that there is, we will never see some $2,000, $2,500 mortgage payment in Southern California anymore. Everything is in the threes now. It sucks. Wages are up 6%, but inflation's at 8.5. I know. That's why sometimes you need to make changes. I looked at it today. I mean, like a couple days ago, I thought about selling our house and buy another house. I couldn't even do that, right? I would not get what I want if I did that. So that's why a lot of people aren't selling their house, but because they're not, but they're in a cozy house right now that they're making their mortgage payment and everything is solid. All right, guys. See what else? Let me see what else. Don, great story, Don. Maria, are you working with people to purchase homes? Yes, I am, Maria. If you want, give us a call, 714-790-9697, or send us a text or messages on here. Once again, 714-790-9697. You can email us at info@what'samortgage. Moses, parents bought in 99 for $99,000. Now it's worth $500,000 and then paid $1,200 a month. Awesome story. Ask your parents, ask people who are older than you, could they afford their house today? Most likely not. And you're sitting here in your 30s, in your 40s, thinking you're invincible, just like I used to think I was invincible in my 30s when I was going YOLO, making money, spending it like crazy, not thinking about my future. You are not invincible. You will eventually hit 50s, 60s, 70s. You will eventually have to retire. Is Social Security and your retirement enough to cover 6 racks, to cover $6,000 a month? Some people, yes. Very far few in between, right? Most of you guys, you need to start thinking about hedging against inflation. You don't even, if you're in your 50s, you don't even have to pay off your home. Like I said, build your equity, right? You retire, you still have a balance, flip that thing into a reverse mortgage, right? You can use your reverse mortgage to cover your property taxes too. So you don't have any mortgages. And when the house sells, whatever's left goes to your kid, unless your kid is willing to pay your bills, right? See here, how high the increase it would be for PMI Buster. I thought boosters, am I spelling busters, PMI Buster. It all depends on your scenario. Definitely talk to Gilbert about it. It all depends on your scenario and your rate. It all depends on your scenario, your credit. If you got the 10% down, I think I would definitely look at 2 things. Look at the 10% down first, PMI Buster, and also look at the 9% down using 1% to buy out the PMI, or look at an ARM. You have 3 different options, Beecham. Guillermo, so since the rates are up before I would qualify at 630, now 585, would you suggest waiting till the houses drop or continue bidding? So this is my opinion. We don't know when it will drop and how much it will drop and where rates need to be at for it to drop, right? Guillermo, so right now rates went up and that's why you qualify for 585. To shake off more buyers, rates will have to climb up more. If rates sat the way they sat right now, and eventually, yes, there will be a house, but we don't know when. We just don't know, right? We don't know if rates are going to go up or go down. But the sooner you buy, the sooner you lock in that fixed mortgage payment. I would bid because right now you might be able to get a deal. You might be at 585, but guess what? What happens if the market softens? If the market softens, some people aren't going to let go. Some people are like, you know what? I'm just not going to sell my house. If you're bidding and you still qualify right now, Guillermo, if someone's able to, instead of getting a price reduction, don't take the price reduction. Use the money that they're going to reduce the price, buy down your rate, buy out the PMI, put you in a better situation. Okay. If you're going 10% down right now, there are ways to drop your payment by $300, right? Put 7% down, use 2%, buy down the rate, use 1%, buy out the PMI. You might be able to qualify for more. All right, Guillermo, there's other things you can do. but you can take advantage of people having to drop their prices, not drop their prices, instead of them backing off, right? People are overbidding. Don't forget, I don't think homes are going to drop. If home drops more than 10, 20% to 20%, we're going to have bigger problems to worry about. You're going to have every investor out of nowhere coming to buy these houses cash. If that's why I am worried. People say, be careful what you wish for, because if prices drop to a certain price range, cash buyers are going to come out the woodworks, right? And if prices drop, your payment will be higher. Think about it right now. For prices to come down, rates have to go up, right? So they're shaking off buyers by driving up payment, not price. They drive up payment to shake off rates, to shake off buyers. So the sooner you buy, the sooner you secure that payment. And if rates improve later on, you just lock into a lower payment. Hopefully that helps you out. You are working with people refinancing. Ramona, yes, I am. Definitely message me. Not a lot of people refinancing. If you reach out to me, sometimes I might not tell you to refi because it might not be worth it. So, definitely I got to see the situation. But definitely, Ramona, give us a call, 714-790-9697. Give us a call, all right? You are truly an inspiration, man. 10 months ago, we started watching your video, and 3 months ago, we closed. Congratulations, Sheila. We still can't believe until now that we are now living in the American dream. I'm so proud of you, Sheila. Dale, we are officially homeowners. Thanks for your amazing team. Shout out to Brandon Rodriguez. What up, Brandon? Ramona, how much will it be monthly payment on $100,000 if we get it into an equity line of credit? Right now, $100,000 on an equity line of credit might be about let me see here, on $100,000 on it. I don't do equity line of credits. You might need to go to the bank, or I can hook you up with a company that does equity line of credits. Let me see here. Worst case, $500 a month on $100,000. All right. Hopefully that helps you out. All right, guys. I really appreciate everyone who watched our channel. Watch our video, our live today. If you have not followed us by now, please hit that subscribe or notification button. All right. Also, if you know someone who's on the edge on buying a home, please share and tag them on this video. All right, guys. And we want to end all our episodes with our attitude is gratitude. Without you, there is no us. So thank you guys so much for watching this.